I have with me Sandip Agarwal, Fund Manager, Sowilo Investment Managers. Sandip, hi. Afternoon and welcome to the show. You being a fund manager would definitely not talk about long-term strategies, but then given the market juncture right now, it's important to know what's going on in your mind. And although the market today has erased the losses in a very range-bound and a flattish territory right now, what sense are you making out of the market, especially post Fed policy announcement?
Yeah, hi, good afternoon, and thanks for having me on the show. The way we look at market is that we are seeing a very positive few things which have played out very positive. For instance, the RBI is upfronting of the rate cut along with liquidity flush. That is number one. Number two, we are seeing a very clear trend that, while if you leave aside the Middle East problem, which is currently there, crude is on a structural downturn for a multiple of reasons, more discoveries, and also everyone is in a race to sell more and more crude, and there is a renewable demand, energy demand. So those things are playing in favor of India, and that also reflects on the current account deficits. So I think we are in for a period. We have seen a period between 2010 to 2024 when, while Nifty returns were good because of the consistent rupee depreciation, the net return in the hands of the FI and FPI was quite low. But now we believe that because of the crude and because of the good GDP growth, and also the more value addition which we are seeing in the electronic imports, I think we are in a situation where probably we will not see a structural sharp declines in INR. And when once this is recognized by the FIs and FPI, I think a lot of money will come to India. We are expecting a flush of money in India because all other factors are very positive any which way for India, the growth rates and everything. And second, we are very positive on the capex thing, which we are seeing a lot of private capex has started picking up. It is not showing in the numbers currently, but it will start reflecting with a lag effect. We have been on a road trip to the industrial towns in the country, and we're seeing a lot of positive momentum on the private capex picking up.
All right, so quite bullish on the markets as well as expecting a flush of money to flow into India. Hi Sandeep, morning, this afternoon. This is Shrishti also joining in. But where do you believe that this money will get parked? Which sectors do you believe that now is the time, and where the valuation comfort is also there, where investors can find comfort?
Yeah, it's a very good question and a very tricky one, but let me put it this way. I think, some of the capital goods stock, they may look expensive in the near term, but if you see the opportunity of capex in next 4 5 years, whether it is in auto hands, whether it is in industrial machinery and all, you will see a lot of demand there. And I think the multiples may look expensive now, but they can create a lot of value. So that is one space. Secondly, the financial intermediary space, which is very hot right now. But I think if someone is taking a 3 to 5 year call, there is a lot of money to be made there on the non-lending side. And even in the private bank space, if you leave aside the next 2 quarters where there'll be some NIM compression, we are seeing a lot of value there in the longer term, because if the economy is going to do well, if capex spend is going to happen, then banks will see very good pickup in the credit growth as well. So that is another theme which can be there. Government is focused a lot on the water theme, and I think there is tremendous amount of work which is happening on the water side. So I think this capex, water, chemicals, cement, and banks, these are all looking at non-lending ones also. These six things are very attractive right now, along with power. And power whole ancillary setup of the power, whether cables, whether transformers, everything looks very good. But you have to obviously see at what price they are available and whether there is value or not. So because if you buy something, end up buying something very expensive, all your returns for next 3 years are already built in. So that little bit of careful we have to be, but I think these 6 7 things will do phenomenally well in next 4 5 years.
Any specific reason why, when we look at consumer discretionary, and especially the next 6 months of this calendar year, where we'll see a lot of impact coming in and in fact consumption going up as because of the rate cut scenario now that we've seen a boost to consumption sector, what exactly are we talking about? Is there any specific pocket where you are focused?
So, consumer, the problem is particularly on the consumption side, the challenge is that, our per capita income is consistently going up. And when per capita income starts going up, then people try to generally upgrade. So basically, the volume may not go up that much and the value keeps on going up. But additionally, our net population addition is also started to, going down. Little bit of deceleration is there. So I think the key theme now will be, more on the per capita income side. So all your services which are on the luxury side, let's say, expensive car, the costly car dealerships, the car services side, the expensive car, watch QSRs, and all those things should do phenomenally well in my view. So now India is more of an increase in per capita income theme rather than only pure volume population led theme. So that is a big change which is happening on the consumer side. So within consumer, you will have to shift your portfolio towards expensive stuff which are proxies to the increase in per capita income.
All right, Sandeep, that's all the time we have for you on the show today. Thank you so much for taking time out and helping our viewers with your strategies.